So this is Euro Dollar Analysis for Tuesday the 17th of October. Let's just look at what has happened since the market has opened on Sunday the 15th and currently Monday. Now, prices did sell off near the end of last week, and we have come down into an area of support in around the 200 period moving average. We've also got this high time frame moving average here in black. Now we do have weekly 1788 and another one at 1810, which they're pretty close together. And as we can see, price has pretty much been range bound within that very tight range of 1810 to 1788, briefly breaking them, but not significantly. Now the prices currently on euro dollar do appear slightly weaker, especially if we go to higher time frames, which I'll do later on. Prices have not broke to the upside to retest 1910 and the 120 region. We have come down quite a bit, and we have consolidated for a lot longer than I anticipated. Might be in anticipation of further news. We've had a weakness in regards to euro in relation to Mario Draghi's comments and so on. So the market's likely waiting for some news this week to find a direction. And yeah, so where do I expect prices to go from here? Now, while the weekly pivots are important, I much prefer the horizontal support and resistance lines marked out in red. Now, we're currently respecting the 200 period moving average, so what I'd ideally like to see is a larger candle of this 200 period moving average, indicating that buyers have come back into the market for a test of 1830, a strong hold of 1830, then heading up to 1910, because the overall trend on the euro dollar on the higher time frames is to the upside. If, however, we continue to test the 200 period moving average from above, I would expect it to break to the downside. So we might see a slight move to the upside, but not with much conviction. Not large candles indicating strong buying momentum. More like a cautious buyers in the market, and eventually a breakdown. A breakdown to 1770, the next area of horizontal support. It being so close by, we might not see a consolidation there or a reversal. We might just actually break that level and head down towards this pivot here at 117.28, below which we'll be looking at a level of 117.10. So what I'd expect on the short side, on the long side, I've mentioned already 1910 and above 120.30. We're not likely to get anywhere near 120.30 until likely by the end of the week, depending on market volatility. I wouldn't expect to see pretty much a break of even 1950 until later on in the week. But overall, the trend to the upside seems to have stalled, especially looking at recent price action. And yeah, we're just waiting for some more momentum to come into the market and see how prices react in and around the important levels of 1830, 1770. But still, I do remain a bit cautious, even though the overall trend on the higher time frames is to the upside. So let's just have a look at the higher time frames. Let's get the scale on here correct. So this is what I mentioned earlier. On the high time frames, euro dollar still appears bullish, even though we've had a bit of selling in August, and we've had a bearish close on the monthly chart in September. Overall, you could still say this could still be interpreted as a bull flag forming for a further continuation to the upside. Now, I suppose the bull flag would still be valid as long as prices stay above 116.12, as highlighted by this horizontal line you can see on the charts, just below where prices are. If I zoom in a bit, see, there it is, 116.12. Currently this month we are putting in, we're pretty close to the month's open, so we're still in on track for a bullish close to the month. We did see some buying after prices briefly breached the 117 level, so we could expect, if we do hold, or if we have a strong finish to the month, we could go on to see the test of the 120 region. If, however, we do break down and close near the lows, then definitely 116 will come into focus, underneath which we'll be looking at the 114 level. So let's just have a look at the time frame below the monthly, which is the weekly chart for into a further perspective. So on the weekly chart, we did see a couple of tests of the 200 period moving average. Currently, the 200 period moving average is sitting down at 1690 and would likely provide some dynamic support. We've also got the 20 period moving average also closing the distance to the weekly 200 period moving average at 1675. So the two moving averages in and around the 1675, 1690, as well as a round number of 17, we'll likely see some, we could see some buying in that region, as the dynamic areas of the two moving averages, as well as the horizontal support, could see buyers re-enter the market to drive prices up. Now, on this weekly chart, we can clearly see we've come up, we've sold off a bit from the 120, near 121. We've come down and we have put in it's not as strong as I would like, this candle from last week, as we did have a bit of selling into the close, but it's a strong candle nonetheless, and pretty much closing almost above the previous week's high. Now, we could still see further selling this week, but I would like to see a bullish close on the this week's candle for me to be more confident about the bull flag playing out and a retest of the 120.92 region. Now, let's just have a look on the daily time frame. Yes, on the daily time frame, we did come into this area which I've identified before in August, where we did have some we did have a bit of consolidation, did have some buying as prices try to, well, as sellers try to drive the market downwards. Got up to the 120 and we've come back down there again, and buyers have stepped back into the market and have drove prices up. Now, we've had 3 consecutive days of selling. What's interesting is this candle on the 13th, we had prices push up. Now, I would suggest that there are a lot of sellers in the market, driving prices back down, but the candles themselves are not very large in size. If you compare them with the bullish candles to the left, the actual bodies of the bearish candles are pretty small, which suggests that the bears have not completely taken control of the market. Now, if we were to take the prices as they are and the current structure, how it is playing out, we could potentially see this being a lower high, and if that does play out to be a lower high, a retest all the way back down to 117 is very likely. If, however, this is just a case of a bull flag forming on this daily chart, and the way you would interpret that is the smaller bodies on these candles indicating there's not a lot of strong selling pressure in the market, we could see a bounce near the horizontal weekly pivot for a retest of the most recent highs in and around the 118.75 region, to move on to the 118.75 to a test of 1910. So yeah, that is pretty much the analysis for euro dollar. So before I go, LCS, like, comment, subscribe. Thanks for watching.